continuum, you are now President of the United States of America. What are the first 3 policy moves as the chief executive of the country that you would announce to create jobs? So, Peter, let's start with you on the right.
So am I answering all those questions? Or
Indeed you are.
All right. Well, first of all, I think one of the reasons that you're saying why are there no jobs in this recovery is because there is no recovery. I think in this case the public is right and the statisticians are wrong. I don't think the U.S. economy is growing at all. I think our debt is growing. We're borrowing more money. But I don't think the economy is actually producing more. I don't think there's any more real output. In fact, the government will admit, even by its own statistics, that during the official period of the recession, household income declined adjusted for the CPI by, I think, 2.5%. And since the recovery began, household income is down by 7.5%. So if people are doing worse in the recovery than they did during the recession, you could argue that the recession never ended. And in fact, I think the depression hasn't ended, and I think it's going to be with us for many, many years, probably throughout the remainder of the decade and then some. And it doesn't have to be that way, but it's the consequence of the bad policies that we're pursuing. And to answer your other question, yes, the Federal Reserve and the government are making the situation a lot worse. They created the problem, and now they are compounding it. When it comes to jobs, I don't know, I'm probably the only employer here on the podium. I employ a number of people. And, the reason that there are jobs, and they don't just fall out of the sky, jobs are created by businessmen. They're created by businessmen who are trying to make a profit. And they make a profit by hiring people. But if the government makes it difficult to employ people profitably, we employ less people. I mean, the problem now is you have a lot of unemployed people because the cost of employing them is just too high. And it's not just the labor costs, or the wages rather, but it's other components that go into hiring people, other mandated benefits and taxes and a lot of the legal liabilities. There are a lot of risks associated with hiring people. The government has made it very dangerous because when you hire people, there are all sorts of ways you can be fined and all sorts of ways you can be sued, believe me, because it's happened to me. And so a lot of businesses do whatever they can to avoid hiring people. If they want to hire people, maybe they hire them in another country where they don't have those liabilities, or maybe they decide to substitute capital for labor. So we have to understand that we are pricing a lot of our citizens out of the labor market. You mentioned a lot of people that have the wrong skills. Well, businesses can't train people because how do you train people when you have to pay them mandated minimum wages? If they have no skills and yet the business has to train them and you need on-the-job training, you can't do it at the wages that are mandated to be paid. And you have a lot of people that have no skills at all, and minimum wage laws completely make employment, not even an option. And there are some jobs that are out there, but a lot of Americans have no incentive to take them because the government makes it far more lucrative to collect an unemployment check. I mean, there are a lot of jobs that people would prefer not to have. I mean, sure, people will take a great job, but why take a not-so-great job if the government makes it more attractive not to work at all? But I think the real impediment to any kind of meaningful recovery is the monetary policy that we have. Because of years of cheap money where the Federal Reserve just kept interest rates too low in the United States, our economy evolved in a way that's very unsustainable. We created a consumer debt-financed economy where Americans went on borrowing money based in many cases on the inflated values of their homes, but we borrowed a lot of money and we spent it. And we spent it on a lot of products that we didn't make, and the trade deficit ran through the roof, and we built up this phony economy based on a wealth that didn't exist. And that has collapsed. I mean, that bubble burst. And the market wants to restore balance. The market wants to correct this misallocation of resources. We've been spending too much. We haven't been saving enough. We've been borrowing too much. We haven't been producing enough. We've been importing too much. We haven't been exporting enough. And so we have to reallocate land, labor, and capital to a more efficient allocation, but the government won't let that happen. We're never going to have a growing economy that creates jobs until the Fed allows interest rates to rise. As long as interest rates are artificially low, nobody's going to save. As long as the government is directing scarce credit to itself by running $1.5 trillion a year deficits, guaranteeing student loans, guaranteeing mortgage debt. As long as the government is making it possible that Wall Street can speculate by getting money from the Fed and gambling with it, there's going to be no credit available for Main Street. There's no credit available to make the necessary capital investments to grow the economy, to produce more goods, to employ more people. People say that there are no jobs or the economy is not growing because there's inadequate demand. It's not demand that we lack, it's supply, it's production. Americans have no problem in wanting things and spending money. The problem is producing things. And we're not going to do that unless we have savings and investment, and we can't have any of that as long as the Fed is subsidizing everything else. So we have to allow interest rates to rise. We can't prop up entities that need to fail. We have to allow market forces. If that means a bank is going to fail, it has to fail. If it means a certain business is going to go out, it has to go out of business. The government can't try to prop up failing companies because it only does that by depriving resources from other companies that might have been able to take their place, that might have been able to employ people in a productive manner. And of course, that's the kind of jobs we want. I mean, we don't just want jobs. You hear a lot of talk about, well, the government needs to create jobs because if there's no jobs, but all the government is going to do is create work. It's not going to create jobs. I mean, we want jobs for the productivity associated with those jobs. We don't want the work. We want the things that result from that work. We want consumer goods. And we're not going to get that kind of employment from government. We're going to get work. The government can hire people to dig ditches, and they can hire somebody else to fill them back up again. But at the end of the day, you've got nothing to show for all that effort. I mean, you've just got ground. We need to produce things, and that's not going to happen from the government. That has to happen from the private sector. And so what we need to do, in addition to having a sound monetary policy, which we don't have, is the government has to get out of the way. I mean, the biggest barrier to companies expanding and hiring, and I know this from personal experience, is government. And if government wants businessmen like myself to create jobs, they need to tear down all the roadblocks and the impediments to doing that. I mean, I am right now expanding my businesses in Singapore. I'm expanding a business in Canada. I'm expanding a business in the Caribbean. I've been, doing things abroad that I would much rather do in the United States. But I know the reasons that I'm doing things abroad, and it has to do with regulations first and taxes second. So if we need more jobs, we got to tear down a lot of these rules and regulations that are driving up the cost of hiring people and working in this country. And we need significant tax reduction, but that's only possible if we slash government spending. You see, the only thing that's probably more destructive to the economy than taxing is borrowing. And if we don't reduce government spending, we can't have tax cuts that simply create larger deficits, especially when the Federal Reserve is monetizing them. So what we really need to do to produce jobs is to slash government spending dramatically. And I think we're going to have to lose a lot of government jobs to gain private sector jobs, because government sector jobs make us poorer. And everybody in the private sector has to pay their salary. Government is a giant burden.
Well, let's hold it there. We'll come back to when President Schiff, and we'll go here from the left now. And we've heard a lot about government's in the way. Is that Peter? The major? Take it away.
Well, if you were ever president, I would be a very rich man, because I make my living betting against the U.S. economy. And if that was what our policy was, it would just completely collapse. The dollar would have no value.
I'd like to make you rich.
But first of all, before I make a couple of comments, I want to ask you a quick question. You said there was a downturn that lasted for 15 years. Which one are you referring to?
1873, and then it went on. It was called over about 5 years later, but a lot of people argue that the long depression went through to 1993, so that's more than 15
Yeah, but
years.
Because we created a lot of money to finance the Civil War.
But that was in 1860.
Yeah, but then the aftermath is when you saw that. But we have unemployment now of 16%, so it's still pretty bad now with the central bank. But one thing I want to mention is what you're saying, that consumption is coming from wealth. Stock market prices are not wealth. Real estate prices are not wealth. You don't create wealth by making asset prices go up. The wealth is the actual asset, the physical plant and equipment. It doesn't matter what price you want to put on it. We didn't create any wealth when we had a housing bubble. We didn't create any wealth in the stock market bubble. Consumption comes from production. That's what's going to drive it. We have to make things before we can consume it. Just simply trying to fix a price on things is not going to make us richer. It's not what's going to create jobs. I mean, That's how we got into this crisis. It was all that government stimulus that inflated those bubbles in the first place, that made us think we had wealth when we didn't. You know, you pointed out correctly that when the bubble burst, Americans realized they were broke. Well, we are broke, and if we're broke, the government is broke. The government can't stimulate spending when we're broke. We need to save. We had no savings for over a generation. We got to save. Americans have to stop spending. That is part of the solution, and the economy has to reallocate resources to reflect that we can't spend anymore because we have no more money. And just printing money and giving it to people doesn't create any demand. All it does is make prices go up. All we're going to do is pay more money for the things we buy. The reason we were able to buy so much stuff during the housing bubble was because we imported it all, not because we made it. And we imported it all because the world was dumb enough to lend us the money. And now they're sitting on trillions of dollars of our IOUs.
They're still lending us a lot of money every day.
They're not happy about it, and pretty soon they're going to stop. And the problem when you're saying that everybody wants our debt, well, what happens when nobody wants our debt? For a while, everybody wanted condos in Vegas, and then they didn't want them anymore. What happens when nobody wants our debt and interest rates skyrocket like they are in Greece, and we're sitting on $15 trillion, $20 trillion in the national debt, and just interest on the national debt consumes 100% of our tax revenues? What are we going to do then?
Well, I think we're going to end up giving away Yosemite, the Grand Canyon. I have a whole thought about that. We do have a lot of beautiful physical assets we can offer the Chinese if they're willing. President Schiff. But
what you're talking about is taking the Greenspan put, which was a big part of the problem, and you want to make it official policy that there's no consequence to risk. Go out there and gamble and speculate.
Absolutely not. Can I answer
that? Didn't you just say you didn't want the Dow to go below 10,000?
Absolutely. So,
how is that on put?
So let me say a little bit about the American jobs market. The labor market in America is a dynamic place. There's something like 30% of jobs are lost and gained again every year. People are leaving jobs, people are gaining jobs. The reason that firms are creating these jobs is so that they can sell goods to American consumers and to other firms that are investing in plant and equipment. Now, there's no magic number that says that unemployment should be at 4%, unemployment should be at 7%, unemployment should be at 15%. We've seen whole decades in the United States when unemployment stayed above 15%, and that is not a consequence of government intervention. We've seen whole periods when unemployment has been at 4%. What makes the difference between the 4% and the 15% is that consumers have confidence to go out there and spend. And you're absolutely right, Peter. It's true that real wealth is in the form of houses and factories and machines. Roughly two-thirds of American wealth is in the form of factory and machines, and roughly one-third is in the form of houses. But when the paper value of those factories and machines falls, people stop spending. When people stop spending, firms stop hiring. And when firms stop hiring, people can't afford to do the spending. And the fall in wealth becomes self-fulfilling. Now, there's an insight that I think was really important that came from Keynes in 1936. And that was we could end up in a free market economy with very high unemployment for a very long period of time. That, I think, was right. Where I think Keynes was wrong, and here I agree with Peter, is that government can't come in and do the spending and create the jobs. We need private sector jobs. Now, if Peter was so convinced that the Dow had a number that it was moving back towards that was a safe number to bet against, he should be in there betting against the market now. Right? And if I argue, so I've been arguing, yes, the Fed should be in there, it should be putting a floor on the market. Now ask yourself the question, or maybe Peter will give me the investment strategy so that when I become president and I put this policy in place, I'll be able to make money on it too. Because I've thought about this long and hard, and I don't think there's a way.
All right, let me shift over.
The Fed, you can put a floor under the market. It's easy to do, but you can't put a floor under the dollar. So if I say the Dow is always going to be worth 10,000, I can print enough money to make that happen. But the problem is, how much is food going to cost? How much is energy going to cost?
I'm not arguing that we do this by printing money.
Well, then how else are you going to do it?
And that's the whole thing that's different about the policy I'm describing here from the ones that you've been hearing so far.
Well, then how is the Fed going to prop up the market?
Because there are two kinds of prices. There are prices for consumer goods and there are prices for assets. One is a relative price, it's the price of capital, and the other is the price of corn, it's what you eat. And I'm not saying that the Fed should be in there printing money and generating inflation. And there's I think, a big misconception, which is that quantitative easing is nothing other than printing money. It's not.
Well,
one of the things that the Fed learned in the new policy of quantitative easing is that it's not only the size of the Fed's balance sheet, which is printing money, that matters, but the composition of the Fed's balance sheet. And people have been running to safety. As we heard, people are crying out to buy federal government debt at the moment. And it's that risk-safety trade-off that the Fed can affect, not by printing money, but by changing the composition of its balance sheet.
But don't you think it has a much riskier balance sheet now with all that long-term debt, all those mortgages, whatever else it's been buying
I wouldn't have
up?
bought long-term debt. I would have bought the stock market.
All right, let me
So
bring
you
this,
want
let me
the
bring
Fed
this
to
back
start
to...
buying stocks?
Yes. All right, well, we can take that.
So
I want to bring this back to...
How are they going to get the money to buy stocks?
I want to bring this back to policy, since that's what the presidential campaign is going to be about. You're now president of the United States. You right now are president of the United States. What are the things you announce right away in terms of job creation?
Okay, well, number one, we need more infrastructure spending. There's no question about it. Like, as long as the private sector is demanding these government bonds, the government can give the benefit both ways. They supply the bonds and they supply the spending that companies need in order to promote their investment. It is, in a
we
sense,
have to
of the
pay the money
hang
back.
hang on a second.
We have to pay it back. It's not a gift.
That's absolutely right.
And then we're gonna be in worse shape.
We're losing productivity every day because we're not producing, we're not investing.
But how do you know this
currently.
infrastructure is going to result in increased productivity? If government,
Because
what if it's a waste?
we have infrastructure needs that we need to address soon and in the future, and we might as well do them now while it's cheap, rather than later when it's expensive.
But
And
it's not
when
cheap.
We're at full, in 10 years when we're at full employment.
Yeah, but the government's not
No,
selling
let me
10-year bonds.
finish.
They're selling 30-day
hang on,
bills.
let me finish. In 10 years, and we're at full employment, and we decide that we need a new sewage treatment plant, or a new bridge, or a new dam, any of those things. Do you want to do it when we're at full employment and the cost of financing is expensive?
No, but
and
we're
the cost of labor is expensive? No, we do it now when it's cheap.
No, but we're not. We are financing with T-bills. So what if next year interest rates spike and we borrowed all this money? We're not locking in these long-term rates. We're borrowing in the short term. The government has to roll that debt over every 90 days, every 6 months. So maybe it's cheap today. It's like a subprime mortgage was cheap for a year or two when there was a teaser rate, and then all of a sudden the teaser rate reset.
Yeah, you're right. And Greenspan made a huge mistake in promoting adjustable rate mortgages in 2004.
Yes,
that was completely ridiculous.
But why do you want us? But why do you want us to take out an adjustable rate mortgage to build infrastructure?
We don't have to take out an adjustable rate
But
mortgage.
that's what we're doing.
The 30-year inflation-adjusted Treasury bond is barely over 1%. 30 years. If you don't think that we can...
But if
that
the
gives us
government
plenty of
actually
time.
tried to borrow a lot of money at that rate, the rates would go way up. The reason they're so low is they're not
I'd like to throw a
borrowing.
word in here. So,
All right, let me suggest one thing. Let's say most of us agree that the infrastructure in this country needs work and needs a lot of it. That's not going to do a lot for liberal arts graduates and a lot of others who are not going to be out there building bridges, et cetera. So my question is, and I have a question here from the audience, do you think the government should be guaranteeing and providing student loans? Because that's the reality for a lot of people. Younger people today are saying, well, is a college education worth it? Or can I look ahead to an economy that no matter what kind of training I get, unless it's perhaps building bridges or welding beams, there's not going to be work for me?
Yeah.
Let's start with David.
Well, actually, you have to keep in mind one thing, and that the whole point of student loans is that it's essentially risky for students to take on that education. They have to make essentially a capital investment, and it has to be recognized that they take out those loans because the assumption is that in the future they're going to have a higher wage, that they're going to be more productive workers. So somebody has to take on that risk of giving them that loan. And at some point, that has to happen. If nobody takes that risk, then it's not going to happen. You can't put it all on the individual because nobody knows who's going to be the wealthy person in the future. Now, there's one other thing to keep in mind here, and that's the fact that, in fact, a college degree doesn't actually get you the benefit that it used to. It used to be we had a much more equal distribution of income, and that there was a serious college premium. Today, a large chunk of college graduates do no better or even worse than people with high school degrees. Now, there are people at the top, so on the average, college degrees will get you a better job and a better income than somebody with a high school degree, but it's not that universal. And so what we have to address is a lot of the government policies that actually increase that inequality, where you have people at the top, where you have people that are in finance, where you have people that are, where you have doctors and lawyers who are all protected from competition the way, while in contrast you have auto workers. The auto workers used to have great jobs, but we put them in competition with the rest of the world. That was a policy choice. That was not some strange market outcome. That was just a deliberate decision that we were going to put auto workers and factory workers and janitors in competition with the rest of the world. And we have protections for doctors and lawyers and economists and academics and the whole bit. And there's a good reason, good market reasons why they get paid better than the rest of us.
All right, I want to take another question from the audience.
Can I
Peter,
just do something on the student loans? Because it's...
well, let me ask you this, and you can interject something else. One of the debates we've had in this country is long-term extended unemployment benefits, and that debate keeps coming up and the benefits keep getting extended. My question to you is, if President Schiff was in the White House, would you end extended unemployment benefits immediately?
Absolutely.
Okay.
Now let me go back to student
Well, no,
loans.
wait, no. Not so easy. Not so easy. Because it's easy to say we need to get rid of extended unemployment benefits. What do we do with those people who some of whom literally may starve to death without that government check?
Now, I'll also eliminate a lot of the barriers that stop businesses from creating jobs, but a lot of people will there are a lot of jobs that go unfilled. People don't want the jobs because it's more lucrative to collect unemployment, so they have the option of not working. If you take away that option, people will take jobs. But I got to,
very
few
people.
I just want to mention that the worst thing that the government ever did to students is guarantee their loans. Because that is the reason that college is so expensive. If it was a free market, education would be cheap. Nobody would need a loan to go to college because college wouldn't be so expensive. My father worked his way through college just like all of his friends did, and they got educations that are as good as the ones today, if not better. The degrees were far more valuable. The problem is the beneficiaries of student loans are the universities and the colleges that rip off the students with these inflated prices. There is no way they can pay for them if they didn't get these government-guaranteed loans. If we got rid of all the guarantees, students couldn't get loans. They'd still get educations. They just cost a lot less because the universities would now be in competition for price. Because if they didn't slash their prices, they'd have no customers.
Student loans are the only form of debt that has recourse on your Social Security benefits.
Yeah, but the students, when they're 17, they're 18, they don't understand the consequences of all this borrowing. They're told they have to get a college degree or they're worthless, and they have to pay whatever the colleges want, and they pay it. And, I had a girl, a young lady, 21, 22, on my radio show, graduated a 4-year degree, $200,000 in debt. There's no way anybody could have done that in a free market. What we need is to get the government out of education so the prices come down.
I want to step in here. So there's two issues on the table. There's why is education getting more expensive? And along with that, we can ask why is medicine getting more expensive? Why are all professional services getting more expensive? And then the second question is, should we have student loans? And the reason that education, medicine, professional services are getting more expensive is that there's a skill premium, that those jobs are becoming, those jobs have high value added, and moving into those jobs it generates high wages for you in the future. Now, should we have student loans? I believe so, yes. Why? For the same reason that almost every civilized society has mandated education for its people, because education is not just a private good, it's a social good. And the more education we have, the more communications we have with each other, and the more that the society is able to produce, not just...
Auto mechanics require a lot of skill as well, but they don't get the same wages that doctors do.
But I don't. Why is education so much more expensive today than it was in the past? You're saying the teachers are more skillful?
No, I'm saying that the skills are being imparted by education are now harder to come by, and the professionals who are providing those skills have opportunities
No,
outside.
I'd say that the typical college grad today probably knows less than the typical college grad in the 1940s or the 1950s, when college was a fraction of the cost. I think if you want to know why college tuitions are rising and why health care is rising, it's because that's what the government subsidizes. If you look at some parts of medicine, like cosmetic surgery, like eye LASIK surgery, the costs are coming down. It's wherever the government is involved with a subsidy, that's where the price is going up. I mean, why are television sets getting cheaper? Why are computers getting cheaper? You know, why are cell phones? It's because the government's not there. There's no subsidies to buy a cell phone. The free market brings prices down. When the government gives kids money to bid up college tuitions, tuitions go up. If they didn't have all that money, colleges would be forced to lower prices. And given all of the computers we have today, the internet, today's technology, we should be able to educate our students at a fraction of the cost from the 1940s or the 1950s, especially with the economies of scale. The classrooms are enormous. I mean, the cost per pupil should be coming down, not up. It's because of the government and these student loans, and the students graduate now, they have a mortgage and they have no house, and they graduate into an economy where everybody now has a college degree. So what good is it? Now if you want to do anything, you need a master's degree or a PhD, and you got to borrow even more money. And then by the time you start working, you're 28 years old.
All right, let me bring this back down again. From the macro to the micro, I have a question here about, how do we get corporate America to spend their huge amounts of cash? And as someone who writes about this all the time, that there's this focus on the Fortune 500 or Fortune 1000 and all the money they have, which they do have plenty. Corporate power is the only thing that has increased or gotten larger in the last few years. Certainly, state and local governments are suffering. The federal government is bearing the burden, but corporations have gotten stronger and stronger. But what we all hear from time to time again is the real job engine in this country is entrepreneurs, right? Individuals, small businesses. And they're, in any survey you measure of them, they're generally pretty morose. They don't have any confidence. Even if they have cash, they don't want to spend it. Another question from the audience was, well, how do you get 300 million people in this country to decide they want to spend money? I could make a case here, folks, that given the amount of cash, not just that corporations have, but that individuals have shoved into bank accounts earning nothing. I wrote a column about a year ago saying, never have so many people been so happy to earn so little on so much. I mean, think about it. People are putting money into bank accounts that pay 0.03%. What's wrong with us? We used to be a risk-taking nation, right? There is plenty of capital out there. But it's the chicken and the egg situation. We haven't talked about this enough today, I don't think. You have to have demand, right, in order to get companies to want to invest. But people don't spend because they're worried that there won't be jobs, right? So, Peter, let me ask you this. Would you, I mean, to give an assist to corporate America and or down the corporate and company chain, would you get rid of the corporate income tax?
Well, first of all, corporations don't pay the income tax. Their shareholders pay it, their customers pay it, or their employees pay it. I mean, the corporation doesn't pay it, we should have no corporate income tax. But getting back to this idea about spending, to say that the U.S. economy is in trouble because there's not enough spending, most people are spending everything they earn and then some. Look at all the credit card debt that's going up. We are spending like crazy. The solution can't be more spending. The actual solution is less spending. We have to stop the spending. You know, it's not, if we save our money, then we have the ability to increase our wealth.
But if we all start saving,
you can't actually do it unless people actually buy capital goods. No. You're not going to buy capital goods if there's no reason to.
No, there is
We have
reason.
The ability to spend.
No.
We have lots of savings.
No, there
we
is
have no
reason.
incentive to invest.
But look at all the goods that we're consuming that we import. We're running a $50 billion a month
That's
trade
right.
deficit.
We have. That's
we
right.
Need to start
we have a
stuff.
trade. Yes, we have. That's another issue. We have an overvalued dollar. We have a trade balance that's been out of whack for a good number of years, and it is critically important that the dollar fall.
But that's telling
because you know what? We actually export 14% of what we produce. It's not like we don't produce anything. We're just out of balance. That has to get brought into line.
We actually export more than any other country in the world.
But we don't export enough.
That's right. We don't export enough because our goods are too expensive and our imports are really cheap.
But we got to consume less and produce more. That's what that
okay, but Peter, let me back up for a minute here, because this panel is about job creation. Let's just say that how did Keynes refer to it? The paradox of thrift. We all start saving like crazy, right? Which we did for a while after the 2008 crash because everybody was scared witless. And consumption collapsed. let's just say everybody decides
that's
today
good.
to start saving.
No, that's not
not
So
good. That's
consumption
not
collapses.
That's
How does
not good.
collapsing
So-
consumption create jobs?
Because, well, first of all, we're going to produce and export because there are a lot of people around the world that have savings that can actually afford to buy stuff. If we've gone through a generation where we've overspent and overconsumed, we bought things that we never should have bought. Americans went on this giant shopping spree. We're loaded up with stuff that we never should have
So
bought
this,
in the first place.
I
The
need to,
solution isn't to buy more.
I need to jump in here. So it's certainly true that we went on a spending binge. The balloon went up, asset values went up. The solution was not to put a pin in the balloon and allow it to crash to earth and have 9% unemployment for a
The
decade.
solution was to prevent it going
Those-
up in the first place.
Yes.
that would have been good. But rather than put the pin in the thing, we need to bring it down gently. We don't need to put 9% of the workforce out of employment for a decade.
No, we didn't
And
have
can-
to do that.
And we can.
That's a consequence of government policy.
And that
If
is
we
not
let
a
the bubble
consequence
pop,
of
we
government
wouldn't have all that
policy.
unemployment.
You would have us go back if a writer writes a bad novel, we don't all start going back and using clay tablets. The policies
Well, I
that
don't get your analogy there.
the policies that were put in place, the regulatory mechanisms that were put in place worked well for a long time. We have to sit down and
Which
figure
mechanisms?
out the Federal Reserve System.
No, it did work. It was been a disaster. It didn't work well. That's the problem.
It worked a lot better than 19th century capitalism.
I would disagree profoundly that the 19th century was far more productive, far more economic growth, especially for the middle class and the lower class.
We had
than-
5 major recessions.
Well, yeah, this one is a bigger. This depression is going to dwarf the Great Depression. So you forget. It's just getting started. We're not over.
You may be right about that, but if you are right about that, it certainly doesn't have anything to do with bad government intervention here.
Well, sure it does.
I disagree.
All right, let me we have a deficit commission that is supposed to come out with their recommendations by the end of this month. If they don't come up with, I believe, $1.5 trillion in by the way, it's reducing the deficit over the next 10 years by $1.5 trillion. It's not actually bringing the debt down. It's simply reducing the deficit. If they don't come up with $1.5 trillion, I think then the law reads that there's a trigger that automatic cuts kick in of $1.2 trillion. So, Peter, we may get what you want next year. We may get some kind of federal austerity, or the beginnings of federal austerity, on top of state and local government austerity. So we may actually have a much greater weight on consumption, meaning that the consumption may be challenged. My question to you on this is this, though. Let's just say that everyone decides to start saving money again. Consumption collapses. Your idea is we can export more. My thought is if we got serious about austerity and people started saying, wow, the United States is really serious about its fiscal policy and bringing the debt down, the dollar could rocket, especially versus the euro and a lot of other currencies. Suddenly, we would not be in a great position to export anymore.
Well, first of all, the big problem with our global competitiveness is not going to be the exchange rate. Remember, at one point in America, we had the strongest currency in the world, yet we produced the lowest cost goods in the world and paid the highest wages in the world. So what's making us unproductive is not the exchange rate, it's the taxes and the regulations that diminish our competitiveness. And that's what we have to change. But if Americans stop producing, it's not just everything isn't going to be exported. We're also going to consume some of the things that we produce, as opposed to borrowing money to import the things that we don't produce. But when you're talking about this deficit commission, you're talking about this 1.5 trillion. See, that's over 10 years. So it's really only 150 billion, but it's not even 150 billion because most of that 1.5 trillion is going to be scheduled for the out years. And of course, it's not really a reduction in the. First of all, the big problem with our global competitiveness is not going to be the exchange rate. Remember, at one point in America, we had the strongest currency in the world, yet we produced the lowest cost goods in the world and paid the highest wages in the world. So what's making us unproductive is not the exchange rate, it's the taxes and the regulations that diminish our competitiveness. And that's what we have to change. But if Americans stop producing, it's not just everything isn't going to be exported. We're also going to consume some of the things that we produce, as opposed to borrowing money to import the things that we don't produce. But when you're talking about this deficit commission, you're talking about this 1.5 trillion. See, that's over 10 years. So it's really only 150 billion, but it's not even 150 billion because most of that 1.5 trillion is going to be scheduled for the out years. And of course, it's not really a reduction in the way we all think of that. It's a reduction in the proposed rate of increase.
So it's not like somebody who weighs 150 pounds that says, I'm going to go on a diet and go down to 120 pounds.
Right.
They're saying, I weigh 150 pounds, I was planning on going up to 200, so I'm only going to go up to 190, and so I lost 10 pounds. So there's no real cuts that they're talking about. If we actually had significant spending cuts,
I think I made
it would be
that
good.
point, but you made it better, I will concede. Let's go to David. You got.
See, you know, you mentioned earlier that the politics here is kind of in a circle. And this is something that I find really surprising. I would think that it would be the conservative, you know, more market economist that would understand that prices matter. If the dollar is high, that's like a tariff on all of our exports and a subsidy to all of our imports. And you're going to tell me that that doesn't have an impact on how people spend, how consumers in this country, with their decision to buy goods from the United States or from across, and who produces, and whether it's worth it to ship that production overseas or not.
Yeah, but a
you
weak
can't
dollar,
tell me that.
a weak dollar doesn't just affect our imports; it affects what we produce here. As the dollar goes down
That's
in value,
correct.
because as the dollar goes down in value, it's more expensive to manufacture here because raw material costs go up, energy costs go up.
Well,
Also,
you have to make a decision. Like if you want a better balance of trade, some imports you're going to have some balancing.
Well,
something
it's
has to go up and something has to go
what
down.
I'm trying to tell is a lot of what we make here, a lot of the things that we manufacture here, we just assemble it. We import all the components. And if the dollar goes down, American manufacturers are going to have to pay more for all the parts they import. So prices are going to go up. It's not a panacea.
So you're okay with China subsidizing our imports?
No, well, China is subsidizing our consumption. They're part of the problem because they're supplying
They're
us
not
with the
just
heroin
subsidizing-
that
they're
we're
not-
addicted to. China is propping up the U.S. economy.
Right, China's making a huge mistake.
Yes, they are.
They're
You're
holding
right,
on
we
to
agree. China
trillions
is-
of dollars worth of
China
worth of
is
dollars,
flushing
and
a lot- yeah, China
and
is
they've taken a bath as the dollar's fallen.
Yeah, China
They
is
should be
flushing-
using that for internal.
Yes, China
Yes,
should stop
absolutely.
buying dollars. They should let the dollar go down, let the RMB go up. That'll be China's gain and our loss. Yes, they should do that. You know, they are subsidizing our economy.
If only we could make it premier, Schiff.
But you're forgetting it's their loss and our gain.
In the short run, it's our gain. In the long run, it's our loss because eventually they're going to stop supplying us with all this free stuff. And then interest rates are going to skyrocket and consumer prices are going to skyrocket.
But again, if consumer
subsidizing.
prices are, like, who's the market economist here? If consumer prices are going up, that's an incentive for businesses to actually spend, to actually invest, to increase their production so that they can sell to U.S. consumers.
But
that's exactly what we want.
U.S. consumers will be broke. What are they? Right now, the only reason they can consume is because people will accept our paper in exchange for our stuff. We have to turn American consumers into producers. If they produce, they can consume. Right now, we're living off the
Right, but the
production
question
of
is
the
who they're going to
Chinese.
sell to. That's the question.
Well, if
There's an
you're-
entire world out there. We're going to tax them anytime they want to actually sell to someone else. No, of course, we have to let them. Because that's
All
what
this
affects.
liquidity is out there is because people are scared. There's a crisis of confidence. We need to inject confidence back
What
into
do
the
you
economy.
think the Fed should do? What type of monetary policy would create jobs, in your opinion?
I think that if you ask what created jobs in the past, what created jobs in the past was lowering interest rates. What lowering interest rates did was boost the value of the stock
so
market.
you think we need another bubble? That's what we need, another bubble.
No.
Because that's what they did.
No, it's not a bubble.
The real estate market was not a bubble?
The real estate market was a bubble. The stock market was a bubble. And
that was because the Fed kept interest rates too low and blew up those bubbles.
No,
That's
it wasn't.
ridiculous. Greenspan could have easily popped each of those bubbles just by speaking out again. If
Greenspan
had been out every day, Greenspan and Bernanke,
Greenspan chose.
He didn't want to pop them.
Greenspan
He wanted them
chose
to get as big as they could.
not to pop the bubbles because he wrongly decided, in my view, that we could just clear up the mess afterwards. Now, clearing up the mess afterwards has turned out to be a much harder enterprise than it appeared to be. No, I'm arguing, Peter, that we should be preventing those bubbles from occurring in the first place, and rather than allowing the market to pop them, we need to bring down a safe landing. And the way to do that is open market purchases of those assets.
All right,
I don't understand. You're saying the Fed
me-
should lower interest rates to get the stock market to go up.
I'm saying the Fed did lower the interest
But
rate.
you're saying going forward, though, we should do that again.
No.
Well, we
In
can't
fact-
do it again because we've already lowered short-term rates to zero and long-term rates are getting there.
In fact, Peter, just like you, I'm concerned with the possibility of inflation moving forward, and that's an issue as well, which is precisely why I'm arguing we need two instruments to think both about inflation and about the unemployment problem. The UK right now is facing inflation of 5 or 6%, and they're in a situation that I perceive we may well be in relatively soon.
Our inflation
Let
at
me
least that
wrap
high.
this
And the
up.
way-
Let me wrap this up with look, one of the things we haven't really talked about here is just, it seems to me no matter who you listen to these days, including Bernanke, who was way too optimistic about where the economy would be at this point, say 2 years ago, they've all gotten it wrong. And it seems to me that what we're looking at, if we're honest with ourselves, is we're looking at a situation where we're going to have a high unemployment rate for quite a long time, because we won't work out all these problems immediately, and even if there's just no way to do it. So we're going to have a lot of people out of work or underemployed for quite a long time. Maybe it's 10 years, maybe it's 5 years, whatever it is. My point here, though, is in the interim, what do we do as a society? And the last question I had here is, what are the negative effects of the concentration of wealth in this country? We're going to have to make a decision, it seems to me, at the federal level, and as a society, what do we do for the people who are unemployed or underemployed or have no opportunity? Peter, you're suggesting just cut off the extended unemployment benefits. I'm saying, all right, that's fine, as long as we're all in this room willing to say some people will simply starve to death, or they'll get sick and they'll die in their
No,
home.
they won't.
Well, they will. Some people will. I believe that. But don't we have to be realistic about the idea that there is going to be a high unemployment for a long time? And as a society, do we decide, Roger, I think you said it, do taxes have to go up on some level to support people who maybe would like to contribute but cannot contribute at the level they want?
The answer to the unemployment benefits question is that yes, we need to extend unemployment benefits when unemployment goes on for very long periods of time. And the research I've seen on that suggests that the impact on future unemployment is relatively small. Getting the economy back to work is critical, but while there are people out of work, yes, I think we need to have a conscience, and we need to help those people by providing benefits.
I don't know where you're doing that research, but I just know real-world experience, even talking to business people, people will not take jobs until their unemployment benefits run out. They just refuse to take them, and if they take them, they're going to take them under the table. People will say, you got to hire them under the table because they don't want, because that acts as a huge marginal tax. No, look, no one is going to take a job that pays, let's say, I don't know, $10 an hour if you're making $8 an hour on unemployment. Because after taxes, you're worse off.
I personally want to live in a free market economy, but I want to live in a free market economy that has a conscience.
They all do. Capitalism is the most moral.
Okay, let me end this on an optimistic note, if I can. The reason I say that is let's just suppose here, because right now. You get up every morning in a job like I have, and I have to watch the markets and the economy, and there are days when I just want to get the knife out and cut my wrist, because I look at everything going on in Europe, and maybe the Chinese have a hard landing, and my God, how will we ever solve our problems and the deficit commission? And I think, it's all going to hell. Well, we thought that 3 years ago. We didn't go to hell. A big part is because the Fed did step in, put more money into the economy. We borrowed a lot more, and now those chickens are coming home to roost. But I would say this, given the amount of liquidity, cash that's sitting out there, right, on corporate balance sheets, on the balance sheets of people who normally would be investors at this point but are too afraid to invest. Let's just say we somehow get to mid-2012, and wow, there is no new recession, at least by the numbers. Europe somehow worked things out. Gosh, it looks like we're really not going into a new depression anytime soon. I would submit that as long as, and the Fed has already said they're going to keep, or they expect to keep short-term interest rates at zero for at least another 2 years. At some point, the capital out there sitting, earning nothing, gets restless and starts to say, you know what, a businessman says, I need to do something here, right? And there's this thing we call the virtuous circle. It's when, especially in a free market, one company begins to do something, and the competitors look and go, hey, wait a minute, we've been waiting too, and maybe we shouldn't wait any longer, including hiring, right? You don't want the best people to get away. There's still a possibility of the virtuous circle. I'm not suggesting we're going back to a gigantic economic growth rate, but I look at the amount of money on the sidelines, and I think if confidence, whatever that means, begins to come up, especially at the business level, I'm not talking about Fortune 500, but smaller businesses, if it begins to come up, I think you will see more hiring, you'll see more spending, and I think to Peter's point, yeah, I do agree that a hell of a lot of people in this country need to save money. Charles Schwab, the discount broker, had a great ad campaign in the mid-90s, and nobody listened to it. You know what the ad campaign was? They were trying to get people to save. And the ad line was, quote, my house is worth $1 million, end quote, is not a retirement plan. But that's the way people looked at it, especially in California. Why save anything? My house is, well, now we know your house isn't going to do it for you. The safety net in this country is frayed. A lot of people do have to save more money. But if we all do it at once, and consumption collapses, Peter, I don't know how we get over the bridge to what you're suggesting. So, but I'm going to leave you on that positive. It's quite possible that if we have this debate a year from now, we're going, wow, you know, things actually worked out a little better at least than we thought we did. Otherwise, I may have to cut my wrists at one point here. Thank you very much for coming.